Good morning, ladies and gentlemen. My name is Greg Michaelowski from ForexLive.com. Today's date is October 5th, 2022. And this is the Forex report. Starting off, we're going to take a look at the technicals that are moving the markets. We have a little bit of a different day than we saw the first 2 days of October. On the first 2 days, we saw the U.S. stocks and global stocks move higher. We also saw interest rates move to the downside. We saw gold prices move to the upside. We saw oil prices also move higher. Of course, they have OPEC coming up, and we saw the U.S. dollar move lower. What moved what? But they're all in sync. Is what all those markets were in sync. That's how the correlation tends to go. And today we're seeing a reversal of that fortune with the dollar moving higher. We're seeing the stocks prices moving lower. We see yields moving higher. We're seeing gold prices also move to the downside, and we're seeing oil prices, well, they're dealing with OPEC. So let's take a look at some of the charts. We'll start off with the euro versus US dollar and see what the price action is telling us. Taking a look at the euro versus US dollar on the 4-hour chart, this area right through here that confined the pair for a number of days, if not weeks, through here. And the price tried to move to the upside above its 200-bar moving average back here, and then moved up to test a trend line here. Well, the trend line was developed here and then retested here before rotating back to the downside and moving all the way down to our lowest level, going back to 2002 at 95.35 in trading last week. Then we started to build to the upside in trading this week. We saw the price move back above the 100, back above the 200-bar moving average on the 4-hour chart, and we moved up to a level of parity. Well, it was actually 1 pip short of parity. It came in at 0.9999, and the price stalled against that level as traders leaned against the level because risk can be defined and risk can be limited, and the price started to move back to the downside with the dollar moving to the upside in trading here today. This is what it looks like on the hourly chart for that currency pair, and the price is moving back down toward this lower swing area through here. This is of that trading range where we had to have a swing low, swing low, swing low, swing low, and then we had a swing low here before moving to the downside. We did trade above and below it here, but then started its rotation to the downside. And here we are moving back down toward that level. The 38.2% retracement of that longer term, that move down from the September high, is in play here at the 98.53. But watch this level through here, comes in around the 64 to around 77 level here in the euro versus US dollar. That would be our next target on the downside for further selling. Here on the upside, we do have this swing area here up to 99.13. We are trading below that level, currently trading at 0.03 after trading to a low price of 915, 0.98915. So we're sort of in between these swing area here, and the 100-hour moving average. Get above the 99.13. We could see some relief or rally to the upside as we extend back toward the upper end through here. We will see, but correction day after trading up to the parity level in trading yesterday. Let's take a look at the dollar versus yen. Story remains the same. The price this time moved to the downside here after finding the resistance against the 145 level. We know these levels through here. We moved above it on Monday's trade, but not for long, and the price rotated back to the downside and reestablished the level on trading yesterday. What is different in yesterday's trade is that we moved back below the 200-hour moving average. It's the green line in this chart, and we closed below that level. And you can see in the Asian session we respected that 200-hour moving average before moving down toward the 38.2% retracement. Since then, got within about 9 pips of that level, and then started rotation back to the upside. We are back between the 100 and 200-hour moving averages. This is going to be our barometer. Move above, it's more bullish. Move below, it's more bearish. Right now, we're trading in between it, so the market is unsure of which way it wants to go here, waiting for the next shove. We'll see what the U.S. market data and markets do today to either encourage that move to the upside or discourage the move and move it to the downside. The pound versus U.S. dollar is one of the weakest of the major currencies. It is the weakest of the major currencies as traders correct some of the gains that we saw have seen over the last 6 or so days after the market bottom at 1.0353. I guess it's more than that. 1, 2, 3, 4, 5, 6, maybe 7 days. We saw a rotation to the upside, up day. guess it's an up day. So, 6 or so days to the upside. Now we're seeing a corrective move back to the downside. The price is right near the 50% retracement of the move since the August high to the September low. So the two-month range that comes in at 1.1323. We're currently trading below that level, 1.1316. Let's drill down, take a look at the hourly chart here. And what we see on the hourly chart is that the high price today stalled near the high price from yesterday. Now we have a new ceiling at the 1.1495, just below the 115 level, and the price moved below this swing area here. Swing low, swing low, swing low, swing low, swing lows through here, swing, then reverse to swing highs, swing highs, swing highs before moving to the downside. So this area right here was a key swing area, and that's going to be our resistance on the top side. It comes near the 114.04 level. That's the low of that swing area. So be aware of that level. We're also below this swing area here. We have swing low, swing low, swing low, and reverse to the swing highs through here. So similar pattern that we saw right here, but just in a little bit lower here. So this level is also going to be a close resistance level up to 113.54 level. Keep that level in mind. We're trading at 14, so the 113.50 to 55 level is resistance on the top side. We also have the 50% retracement level. Here on the downside, we're going to have the rising 100-hour moving average as a target level, 112.38 for the sterling versus U.S. dollar. Dollar Swiss is looking like it's trading more or less its technicals. We traded below the or traded down to the trend line here in trading yesterday after breaking below the 200 and 100-hour moving average. Tried to hold it through here. Here could not, and moved its way down to the trend line. Traded above and below that trend line here in trading, admittedly, but the market couldn't get to the 38.2% retracement. That kept the buyers in play, and we pushed the price back toward the 200-hour moving average up here and the 100-hour moving average, where you're currently back below that level after coming back and testing the trend line. So from a technical perspective, trend line support on the top side, we have resistance against the moving averages, waiting for the next shove either to the downside or to the upside. If we go to the downside, we need to get below the 38.2% retracement. That is the minimum retracement of a trend-like move like we saw here. Now we did move below it through this area right here, but again, we came down to the trend line here and found support. So all these levels are in play. We just reversed the trend line and the 38.2% retracement. Need to get below those levels, and then we'll look at this swing area down here for the dollar versus Swiss. On the top side, we move above the 100 and 200, and we'll be looking toward the 98.73 level, which is the top side of this swing area through here. You can see the different levels there. Finally, let's take a look at the New Zealand versus U.S. dollar. We had the Reserve Bank of Australia yesterday, or actually, we'll look at the New Zealand and the Aussie versus U.S. dollar. Yesterday, we saw today we saw the Reserve Bank of New Zealand raise their rates by 50 basis points. Yesterday, we saw the Reserve Bank of Australia raise the rates only by 25 basis points. The raise of 50 basis points initially saw the New Zealand versus U.S. dollar go moving to the upside, but since then we've seen the weakness and the dollar buying come back in here as stocks move lower, and we get sort of the risk-off sentiment here for that currency pair. We are trading above and below the 100 converged 100 and 200-hour moving averages. This is going to be our barometer here for either upside or downside for the New Zealand versus U.S. dollar. But the important thing is that the Reserve Bank of New Zealand didn't follow the trend of the Reserve Bank of Australia, which raised their rates by 25 basis points instead of 50 yesterday. It caused a lot of anxiety in the market, lots of ups and down price action. Initial move was to the downside, then we saw a rotation back to the upside, and then back down again, and we're seeing the U.S. dollar influence starting to weigh on the Aussie versus U.S. dollars and move below this swing area, but we're back above it, and like the New Zealand versus U.S. dollar, the two moving averages are near converge. So this is going to be our key barometer, either stay below it or move above it for that currency pair. My name is Greg Wenkolowski. I hope you got enough out of this report here today to start your trading day and get it off to a good start and set the plan going forward. These levels are important not only in the short term but in the long term, and in defining the risk, defining the bias. So good fortune with your trading. Bye-bye now.